We came into this year and we were actually pretty bowled up on the macro situation, and it's proved to be right so far. If you remember, at the end of last year, crude was really beaten down, but it was clear to us that OPEC just wasn't going to stand for it. They were more interested in a higher price than maintaining its market share. They had an OPEC, kind of a mini OPEC meeting yesterday, and our favorite cartel didn't disappoint. They said, we'll continue to balance the market, keep crude off the market, which is, keeping prices elevated right now, which is obviously good for these stocks.
Mike, why aren't they afraid that just cedes market share to the U.S.?
Yeah, they tried it in 2014. It was a disaster. They thought they could really kind of beat down these shale players who they thought wrongly at the time were the high-cost operators. That resulted in basically the U.S. getting more efficient, continuing to put production on the market. We had $26 oil in 2016. So they've backed off from that strategy and have said, we'll be the balancers of market. Saudi came out yesterday, their energy minister, and said, listen, we'll produce 300,000 barrels less than our quotas in April and May. So that kind of tells you their strategic outlook right now.
And there's WTI crude about just under $59 a barrel, kind of at that 60 mark almost, and gas prices obviously have followed it higher. So what are your, Mike, favorite recommendations or ways to play the energy space right now?
Yeah, the one that we love, Kelly, this is just the Teflon stock in the E&P sector, is Cabot Oil and Gas. We're about to wrap up a 130-page report that we do every year on capital efficiency after we get the 10Ks out and look through everybody's reserves. And Cabot is the clear winner in time, year after year, in terms of just posting the best returns in the E&P space, which is really what it's all about. So Cabot is kind of a no-brainer to us. It's a little more gas levered. On the oil front, we like two. One, PDCE. This is a name, PDC Energy, is kind of gives you the best of both worlds right now. It gives you growth and it gives you free cash flow. And a really cheap name, too. It's about an 8% free cash flow yield on its 2020 numbers. Love that one. And then kind of a comeback name here, a stock in the Permian, Parsley. PE is the ticker. A name that has underperformed a lot of these Permian peers. It's now trades at a discount to its Permian peers. Historically, it had been at a premium. It's got a great inventory, a very capital-efficient company, looked really good on the 18 numbers, a pretty big performance uplift versus 2017.